Okay, so let's go over my volume strategy. We're going to do some live back testing. Okay, we're going to use a random number generator and we're going to go through some tickers. Let me pull up my random number generator here. Hold on. Pull up 3 NJS. Let's see what we get. Okay, NJS. We'll go to one that's on yeah, here we go. The NYSE. This one's probably at least got some decent volume. Let's see if we can go back to 2000s. We'll go as far as we can. Maybe 1990. Here we go. 1990. I have no clue what's gonna happen. Okay, so we could just show that this is organic. Okay, so already we see, right? Already we see this one nice high day of interest here. Okay, so most people are probably thinking about now, where's your indicators? Are you going to draw trend lines? I'm not going to do nothing. Okay, I'm only using volume. I'm going to show you exactly how I'm doing that. And possibly we can put some drawings on the screen, but we're going to be trying to stick to only using volume and showing exactly how it works. Okay, this is very simple stuff. So let's get to it. So basically the way I'm thinking right now, is we have a high interest day. Oh, we'll make this a yeah, there we go. High interest day. Okay, this green candle. So that means a lot of people were doing stuff here. I don't necessarily care buying, selling, whoever was doing what. Every buyer there's a seller. Okay. In this case, the buyers are more aggressive than the sellers. But look, we have failed it. The days after this high, we're below it, is what I'm trying to say. We are lower than that day's price. So that tells me a lot. Okay? It tells me a lot. That means that prices below this are not cheaper. That's what that means. So already you're going to hear me say a lot of stuff that is not very technical. You can't draw it on the chart. You can't be like, oh, it's at this specific and this, in here, and it's really not like it takes a lot of. You have to think about it. Okay, you're gonna have to put some effort and think about, if I was a trader, what am I doing, right? So let's look at this here. Okay, high interest day, we're below her. There is not higher interest than this day. You got to understand that as we move lower. Okay, and that's for a reason. It's not cheaper. Does that make sense? Think about it. If you're at the grocery store, bread's $5, right? If bread moves down to $4, is more bread going to get sold? Is there going to be more interest? Are you probably going to tell your family, hey, bread's on sale at Kroger? You should probably go get some while it's at $4 right now, right? That's expensive bread, but I'm just making a point, right? Probably interest is going to pick up. In this case, it doesn't. Why is that, right? We got to understand. Well, we live in a market of buyers and sellers. It's not just all monopoly and it's only buyer. No, buyers and sellers, right? So what does it mean when there's interest high and there's not interest at lower prices? What does that mean? Okay, we're going to go back to the chart in just 1 second. Stay with me. I know you probably don't like hearing me talk. Stay with me, okay? What does it mean when all of the interest is at higher prices and there's lower interest as prices get marked down? What does that mean? Well, it can mean two things, okay? One is that this is a very bullish scenario, okay? That means that fair value is changing. We are absolutely forcing prices up. It's like when a car or something, how does the price of a car change and make it more expensive? Well, people are paying what the seller is asking for the car. Makes sense? They are wanting to, but they'll pay whatever price that you want to sell it at, they will pay it. So that's a scenario where interest is coming at the high prices, but it's not coming at the low prices because they might get scared, right? Think about it. If prices are dropping, maybe they want to wait. We'll see, oh man, if prices get back to that price, that's going to tell me that maybe people are buying it again, right? So that's one scenario, but the most likely scenario, right? The most likely scenario is going to be that this is a seller's market, okay? interest is high. And when interest is high, prices are high. Interest is low. And when interest is low, prices are low, right? Because remember, sellers want to sell high and they want to buy low. So let's look at this again. Okay. So immediately I'm making a judgment call here. Immediately you can see I formed my bias. Interest is high. I haven't even looked at the previous bars and the previous volumes, right? Other than this one is the significant one. Okay. A lot of thinking is going behind this right now. There's a lot of thinking, a lot of guessing, right? I haven't drawn anything on the chart other than this one stupid arrow to tell you where the volume, what bar I'm telling you, because if you couldn't already see it. Let's move on. Okay. Or we have 2 arrows. There we go. So I want to see, is this day going to hold? If we go back up to these prices, right? If we go back, let's see, it's the highest price on this day was $4.33. That was the max. Okay. Seller said, nope, that's too expensive. Right. That's the max. If we go back up to anywhere on that day, right, or near it, is interest going to pick back up? Right? And not only pick back up, are we going to see rejections? Are we going to see price start to weaken when it goes near this day, right? So let's see. Let's just see what happens, right? Also, one more thing to note. We have increasing volume on this day, okay, on this candle here. So we need to also be aware that interest just barely started to pick back up. And that's the reason why we are heading back up into this level, right? So we are aware now that there is some interest here. Otherwise, if there wasn't much, this would be extremely bearish. It'd be falling, right? So there's some. We want to mark that, right? And the way I deem that interest picked back up, we can see that there's sort of a trend here, right? We had high interest, and then the next day was lower interest, and then the next day was lower interest, but the next day was higher interest, right? Understand that. We broke the trend, right? So you can understand I'm saying interest, right? I'm not saying buyers. I'm not saying sellers. I'm saying interest. You have to think of it like that. If you're at the store, well, I'm not going to say it again, but it's all it is. It is interest. There's a lot of activity. What happens when we see this activity? That's what we're studying. That's the whole game here, okay? So let's look. We're going to move on now, okay? Boom. Okay? We're starting to see some activity. We are not able to maybe pass this zone or this day, right? This day was becoming expensive. We can understand that because our biases were in a seller's market, okay? So we can understand that. So if this day, the day that we are currently at, has high enough interest, I might take a trade, especially if we continue to reject down. I might take a trade, put a stop loss somewhere above here my yellow line is, right? And see where we go. Now, there's a reason why I don't make profit targets, I will say. I don't make any profit targets, and there is one reason for that. I only care about the money I've lost. I don't care about the money I'm about to make or could make. I only care about protecting my risk, because if there is any scenario to get tighter risk, I want to full-fledged be focused on that. I don't want to, I could make this much if we squeeze this or if we flush this. Or look at this interest day. Look at this. I don't care. I've got burned so many times making profit targets, and just by the hair of the profit, just by the hair, I didn't take it, right? Because I was like, oh, look, we're about to hit it. We're about to hit it. And then it started rejecting and didn't hit it. And then I was like, oh, okay, I'll just wait until, because we're probably going to hit it again. And we don't hit it. So instead of focusing where my risk is and moving my risk into eventually the profit zone, I would be doing that, which is setting profit time. So I don't do that anymore, okay? So that's the whole goal. We are only going to be placing stop loss orders, and you won't even imagine some of the trades that we are going to hit because of only having stop loss orders. Now, we've been talking for 10 minutes. We've only moved like one bar. Give me a second. I had to explain all of this before we start moving candles. Everybody wants to start making money. Everybody wants to start. Let's look at the candles. Think a little bit. This is a market, guys. This is complex stuff. Use your brain, okay? So here we go. Good. So interest picked up, okay? And there is a wick. So this candle here, right? If we delete all the drawings, this candle here is fairly decent, right? Because look, interest picked up on this day, and we were holding this day of interest, but still this one is stronger. Makes sense? Still, the one with 3 arrows is the strongest interest day, right? So what is it going to take to get past that level? Well, if we continue buying the ask up into this level, we want to see interest coming in. We want to see that. They're taking advantage of this opportunity of high interest at these prices. They're going to take advantage of that. Somebody is going to see that and say, man, that's an opportunity to buy those shares. I'm going to take advantage of that. So that's a scenario. But as of right now, immediately we can see this is a bullish setup now. And bullish until where? Probably until this area of interest. And then we might see more downside. That's what I'm predicting. So let's go. But at this point, if we were going to take a short now, I would want to fail this level. And we know that this would be a pretty decent short because of the amount of interest that was from here. Okay, so let's continue. Good. So look, very, very good. Second highest interest from this day, from the three arrow day. This was the second highest interest here. And look, we managed to get below it. What happened when we got below it? Look at this. Ask yourself what happened. Interest didn't pick up. It's not very good for buyers. That's not very bullish. Okay, so I'm gonna jump the gun. I don't know about you, but I get a little excited sometimes, right? I'm gonna jump the gun. I'm going to take this short. I believe that we are going to fail this area right here. Okay, I believe we're going to fail it. I believe that this is going to hold up here, and I'm willing to put on the risk. That's a trade. Is it not? That is a complete trade. So just from that, what do I have to do now? Focus on my risk, move my risk up, move it more in profit as we're seeing, right? More high interest days come in. What's happening when we're seeing high interest days? We are going to now do this, right? I'm not going to focus on putting my profit target here and all that. I'm just going to focus on my risk. Once I put the risk on, I'm taking the bet. That's all I want to worry about. Okay, so let's do it. I'm going to take my bet, and let's see what we get. Okay, high interest. Look, so now we're getting bullish. Okay, this is even more bullish now. But remember, level strength. I was talking about the amount of interest that's up here. The amount of interest that's up here. That's pretty strong. Okay, so also look at these wicks. Look at the amount of distance that we covered on this day in this much volume. So we did in fact hit above here in this area. Look at that. Interest picked up, right? And look, very, very hard. They are defending these lows. If you see these 3 touches on these candle here, on these 3 candles, that's a wall, right? So this could possibly get taken out. I believe it. Everything is still here for the shorts. There's no reason, right, to close the short now. We have our risk. Once I put the risk on, I don't want to psych myself out unless something changes significantly. Nothing's really changed significantly. Okay, if anything, I could move my risk down. And now we have less risk. That's it. Let's continue. Good. So we have another day of interest. Understand? Another day of interest that came in here, this day here, right? This candle. I don't know about you, but I'm going to take the less risk. There's less risk in this position, and preferably when these buyers that are in this area flush more, right? There's only just a little bit here. And look, we're below here. Interest hasn't picked up enough, right? This is still bearish. So I'm going to stay in this position. If anything I could add, right? And move risk even lower. But as of right now, I'm not going to do that. I'm going to continue with my one position. And we could add in the future, but right now we'll continue. See what we get. Okay. Immediately. Once we finish, we got relatively high interest. I'm moving that stop. Especially, look at this, right? Especially, look how much ground we covered back to the upside. Okay. I'm not trying to lose this much profit, this much ground. This is too much to lose in a trade, especially when the direction was originally right. So, yes, this is probably going to be a break-even trade. We moved it above this candle that now has the increasingly high interest. Remember, volume is force, interest is force. Interest moves and flows. It flowed to the downside. I want to follow it down, right? And it seems like we might be stalling here, right? So, what's wrong about this? Ask yourself. What's wrong about this? Are we going to win every time? Are we going to hit a banger trade every time? No, but we're protecting risk every single time. We're protecting risk every single time. We are making sure that we are studying what's going on, the flow. We're studying how the market's changing, how it's moving, right? And we're going to go from there. So let's go. We might get stopped out here. We might not. This could wick back down. I can predict it. Actually, probably going to wick back down and possibly see more interest pick up. So let's see. If anything, though, we get stopped out and we move on to the next trade. So nice wick there. Nice wick there back down. Okay. But look at this. Did you guys notice that? If anybody caught, so go back and rewind the video. I was going to say something about it. Okay. Go back and rewind the video. Look at that candle, how it formed. Okay. Look at that candle, how it formed. When we were all the way back up at this area where these buyers were, right? Where right before we wicked, it looked uber bullish. How was the interest? The interest was very low. So that means from that low of price all the way back up, there was low interest. It makes no sense. Makes no sense, right? So what happened here? We have all this interest now. What happened here? Interest still came in at higher prices. That's still bearish, is it not? It's still bearish. You understand how I'm thinking? Do you understand how I'm looking at this and processing everything? You understand how this is going to be a game of your mental, right? Let's continue. So same thing. Low interest, we're moving up. Now, I don't know about you, but I'm not necessarily going to move my stop at this candle just because the interest isn't specifically high as I would like. It actually dropped off a little bit. So I'm not going to move it. This is still a bearish continuation, bearish exhaustion setup. I'm not going to move it. Okay. I'm going to leave it here. I'm totally willing to accept the break even. Okay. So it doesn't matter. I'm going to leave it. Likely we're going to wick again, but in the unlikely scenario that the sellers aren't here or whatever happened, news or something, I want to leave this stop. I don't care. Let's continue. Okay, we got stop. So let's look at this, okay? What's happening now? Can anybody look at this and tell me what's happening? Just for 1 second. Remember we were talking about, the interest is coming in high, right? The interest is, there's no interest low. That's going to be a clue here. What's happening? Okay. Volume's dropping off. And it's dropping off at what? At relatively higher prices than before. Right? Does it not make sense? Volume should be higher in this area than here. Look. Volume's higher here than up here. Makes no sense. Makes no sense for a bearish setup anymore. Okay. Understand that. Makes no sense for a bearish setup anymore. Okay. Now, does that mean that we can't make a lower low? No, it doesn't. Why is that? Think about that. Why did I just say that? Because what could happen is we could come back higher, maybe up into here, right? Maybe up into here. And all of a sudden, boom, there is a massive amount of interest, just like before, just like up here, right? Up in this area. Massive amount of interest, shuts it down, boom. You have another leg, and this is where everybody start drawing trend lines, right? Everybody will start drawing trend lines. Oh, I'm a trend line trader. So am I. We start drawing trend lines, right? That's how that can happen. But as of right now, the volume is not here for a short. I got stopped out. If I didn't get stopped, I might have still been stayed in the trade, right? Because I could have said, "Oh, that's fine, you know. I'm not stopped out yet. I only get out when I accept my stop loss, either in profit or losing money." So I might still be in the trade. But as of right now, this is still a bullish setup until interest comes back in. Prices don't have to move up for interest to come back in. All that has to happen is interest has to come back in, and then prices will move down. Make sense? News can happen overnight. Anything can happen to make interest come back in. And as of right now, interest is not coming back in. So low volume like this, prices moving up, tells me lack of supply. So this would essentially be a long. Really, that's what it would be. So shameful. It hurts, right? We didn't make any money. We wasted time. But it is what it is. On to the next trade, right? What if we didn't hit the profit target? What if we were targeting these lows here, right? What if we were targeting down here? Oh, I want to flush these buyers out. And we never got it. And we move up. We protected risk. That's all that matters. We only want to protect what we've lost, right? So let's continue. Look at this. Lot of interest came in here. Okay? That's significant. That's significant. So I'm not gonna make this video too long. Okay? I want to leave some cliffhangers. I want to leave you open to the next video. Right? But you're starting to see how I'm viewing. I think this is perfect. I think you're getting a nice view of how I'm using this. Now, let's say something. Let's say prices came near my stop loss. Interest was coming back in. I would have added. Make sense? I would have added and continued the position. Took small amount of risk, continued the position. Or let's say interest was coming in here and prices were lowering much more. Added there. Move my stop to possibly there, which could have been break even at the time. So now I have two positions on, both at break even. I have double the amount of risk with actually no drawdown, right? So I could double the reward on that position. That would be an excellent way to be a great risk management as a trader. But let's see what's going to happen. You're probably itching. Oh, it's a high interest day. Let's see what's going to happen. In my opinion, I think that we do, I was going to say move up, but I can see another bearish snap. Let's just see. Right. So, not the best for bulls. Okay. Not the best for bulls. In fact, this would be a great place to move the stop loss now. This high interest area, day, prices. It would be a great place to move the stop loss. Possibly take another short position. Would be a great play. And look, prices moved down. Volume did not come in. Interest did not come in. So this is still a bearish market now, right? And that's basically it. But I'm still weary. In fact, I do think that we move higher. But let's see. I'm really interested at this point. Let's see. Good. So remember, volume is a flow. Things don't just. And next thing you know, it's a booyah moment. No, things don't really happen like that, right? It's a flow. Things have to change. Things have to move. Things have to, it's like surfing. Trading's like surfing, right? So look, volume started to come back in. It pushed this higher. This is where we start saying, but Teddy, you were talking about interest coming in at the highs. Then why is it still going higher? This is where I'm saying the other scenario. This is the ultra bullish setup. Not necessarily ultra bullish. I can see some wicks here, some stuff there that's going on that is necessarily can indicate slightly weaker than the ultra bullish scenario. But in this case, I would assume that the ask is getting bought, demand is moving, fair value's changing, right? So I can probably assume that anywhere in this area here, where we had these days, let me just remove my drawings. These days, right? These two red days with higher interest, there was some capitulation here, right? Maybe this person or these traders up here were capitulating down here, something like that, and now demand's moving up. Whatever's happening, I don't care. I'm just being in the flow. I'm noticing what's going on. Volume's moving in, right? Interest is coming in. So let's see. In fact, where do you think I would put risk? If I was to enter in right now, where do you think I'd put risk? I'll tell you right now, I'd probably put risk right here. Why is that? Right? Why wouldn't I put it at these lows? Why wouldn't I put it here? I want to put it right here. Because demand came in. Interest came in at this candle. Interest came in at this candle. Remember, interest came in at this candle. We're seeing rejection. Look, prices came down, but immediately we rejected. Now, volume should have came back in, right? But unless we see the candle completely form or move on a lower time frame, hashtag this is why I use multiple time frame analysis, which we'll go over in another video. We necessarily can't really see where the volume came in. If the volume came in at these wicks, hashtag another secret, volume usually comes in on the wicks. Then we can understand that. Volume came in on the wicks, and there was low volume moving through, right? So that's a scenario. But this is where I want to put risk. I want to put it there. I don't care. Oh, put it at the low. Why did you put it at the swing low? No, I want to put risk there. So if we are able to get this candle, whatever, make another wick, we're holding this candle here, shows nice demand. That's where I want to put risk. And I say we do it. I say we live a little and we don't be afraid to die, right? Because in order to live, you can't be afraid to die. Is that right? So let's do that. I say we do that. Screw it. This is going to be the last trade. Let's do it. So we're not that far from risk. Makes sense? Why would I not want to put it here? The only why is maybe I would want to get it closer. But I tell you what, this is close enough. I'm not going to be penny pinching over what could be a nice trade. When you see demand like this, I know I'm talking a little quick. When you see demand like this, possible capitulation here, I'm gonna say this thing could move, especially if we have some kind of trend line here and we didn't move all the way up and we didn't get interest at the highs, etc., etc. It could move. I'm just gonna say we could get some movement here. Okay, let's see. We're gonna put risk there, so I'm gonna buy. We're gonna put risk about right there, and I'm good. Are you good with it? I'm good with it. Okay, if we get stopped, we get stopped. But this is essentially where I would want to put the risk. And also, look at one thing. Look at how prices have been falling on this candle. It's been creating volume, right? Or sorry, the volume has been pushing it. The volume hasn't came in. It's dropped on low volume. So where's the interest? Probably going to be at the lower prices. We're probably going to get a wick. It's probably going to be defended. I will probably be okay. In trading, we're betting on probabilities. That's why don't be afraid. Put the stupid risk on. What's the matter with you? A lot of times you see your edge happen. Your edge is right there and you're worried. Oh, maybe they're on the camera. I don't want to take another trade because, I don't want to be red on camera. Or, put the stupid risk on and deal with it. Let's go. Let's see how this is going to play out. I'm pumped. Are you pumped? I am. Oh, that's fine. So we get wicked. Let's just let it ride. We're going to let it free ride here. A little free bird action. Good. So we're getting a lot of interest coming in. Saw that? A lot of interest coming in. But look what's happened. Right? We are rejecting up in here. But I'm not going to be too quick as to say that we are going to move back lower. Am I? No, I'm not. Because we saw how it happened. And essentially, I really do believe that this high interest day is going to hold. And it's going to push higher. That's what I believe. So for an entry, I would really go with anywhere here. Anywhere in this area. Should we do one more trade? I feel like we should, right? Should we do one more trade? So I'll tell you what. If we take the high of this candle, we start pushing up, I'm going to put my risk at the lows here, right? And go from there. Let's do it. Possibly we get a good trade. Let's see. Oh, it's wicked. It's wicking. Not so good. So, ended up being a short. That's fine. That's fine. Little irritating. But, hey, I hope you enjoyed this video. You can now see how I use my volume strategy, how I create a bias, how I use risk management, how I'm using stop loss orders, and hopefully that helps. I'll be making more videos. I meant for this video to be half as long as it is now, but I hope you enjoyed. Cheers, peace out, volume precedes price, baby.